Hello, trading is closed on June 10th, 2020. We'll go over our calls. We had an optional target of 31.94 cash. Said there was a 95% chance it would print today. And even though we gapped up, it did print. Look for the pattern with the early low. That's it. Tomorrow also has early low. Pattern tends to rally and hit a high in the final hours. Well, that's a high, but it's not a high a day. And that's a negative for tomorrow. And when you have this big drop early, it's also a negative for tomorrow. So for tomorrow, the pattern with the early low, I'm looking for lower prices. And the one rule, of course, is if we gap up sharply, that's off the table. So here's what we said. Rally day, final hour high, dropping significantly in the first hour too. Negative followed by more weakness in the optional target printed. Now, before we get into the MEJT stuff, let's point out that we have more action today, which is typical of a rally in a bear market rather than a bull. This is the kind of stuff you only see in markets where people go crazy, not real bull markets. Here's a stock, JFIN, traded about 40 million shares, went from 538 up to 30, back down to $5 and change all in a day. That just shouldn't happen in bull markets. That's really a bear market phenomenon. It's not alone. This one is CHK Chesapeake, if I can get it to do something. Wants to give me a hard time. Here's Chesapeake. Look what's happened in just 3 days or 4 days. It goes from the teens up to the 70s and back down to the teens. Trades nearly 7 million shares today. That's just not action you see anywhere other than bear markets. So we're in a bear market, and it's just it doesn't mean we go straight down from here. It doesn't mean we don't trade higher ever. It just means keep your antenna up. Let's come take a look at what happened today. Early on, MEJT gave an ultimate sell signal, gave a sell signal with the target printed immediately. Didn't mean you wouldn't go lower, but that worked. There was also an optional higher target that we trade over this line. So when we're dropping here, it tells you you're going to trade over that line, which we did. Later on, said this drop wouldn't stick, it was false. Said that drop was false. Said this rally was false. You can't see it on this chart, but after the Fed announcement, there's typically a 3-leg whipsaw, each leg further away from the point of the announcement than the last. First 2 went up, then we went down by a larger amount, then we went up by a larger amount. The first move tends to tell you what the next big move is going to be, and that was higher. So regardless of what happens tomorrow, that indicator at least argues for higher prices. MEJT identified all these false moves, and this is how I use the system. It can save you money even if you don't make any trades. We tell you a few stories. One appeared in the Wall Street Journal a few decades ago. It was about a private investor, and this woman had a strategy. She'd pick big name stocks completely at random, and if they dropped 3 points, she would sell, and otherwise she would hold, and she outperformed the market, amazing as it seems. And the other strategy is the Buffett strategy. Warren is thought to be one of the best stock pickers around. He has a reputation of picking winners, but that's not true because in bull markets his performance underperforms other investment managers. The entirety of his outsized gains comes not from picking big winners, but from avoiding big losers. And that's how the MEJT system helps you here. You got a pattern, low to high. It looks like you've had your three-leg whipsaw. Looks like you're going to have a big rally into the close. Who wouldn't be tempted to go into this? But MEJT says the move is false and there's a target way down here at much lower levels. It doesn't say we have to stop here, but even if you don't go short, at least it argues against taking the long. It would save you from a big drop like this one. It's not that it picks every winner, it's that it avoids big losers, and that can help your performance a lot. If you avoided this one loser and didn't go along with the crowd here, you would pay for it in my book many times over. All right, what about tomorrow? Well, I still think we're going to break through this line eventually. We can go down quite a bit without invalidating the rally structure. We're right now at this lower line. We've hit this line a number of times, and that one should fall at some point too. And if it's going to fall sustainably, you really should gap under the line. Otherwise, any drop under the line should retrace. Futures are down already. Doesn't mean you won't gap up, but if you don't gap up, the odds are we're going to trade lower, and if it's sustainable, it should be a gap under today's low, and if it isn't, there'd be a recovery, not necessarily the same day. Well, Thursday features the early low. Doesn't mean you won't gap up. Early weakness, failure to close near the day's high typically mean lower prices should print. Gapping and promptly overtaking the high kills the call. For to move down sustainably, we should gap under today's low. If we do gap down, how low we're going to go? I don't think it has to be a disaster at this point, since I do have higher targets. But the sentiment indicators show an excess of call buying, and such excessive call buying tends to be punished before the next leg up. And let's not get more specific than that. Tomorrow has the early low, and that's today's call.